So did you know that YouTube influencers only had to put on a couple of indicators or a couple of little metrics to identify what way the trend is going? Now, discovering where BTC is going or discovering where the altcoins are going helps massively. We're going to talk today about trends, how timing in the market could save you a lot of money, and ultimately some rules that you can have that may well make you more successful in the long run. So let's talk about it. Trends. The trend is your friend. If you're new around here, I do some psychological, educational stuff on a Friday. And this is the biggest thing, and it's why people ask me the question, why aren't I going long right now? Because I don't need to. Don't want to, for that matter, because we're still in a downtrend. Looking at that on the screen right now, right? Keeping it super simple, we're going down. Right? Realistically, we're in a downtrend. There's nothing... You're only longing on one set of rules, which I will cover and talk about in this video. It's very, very simple when you get the ideology of it. Now, what is an uptrend? What is a downtrend? We're going to talk about that, but we're going to first talk about time frames first. Time frames are hugely important here. Daily time frame looks a bit crap. 8 hour showing a little bit of a sign of relief. 4 hour it's looking a bit better. But realistically, it's not really strong enough versus some of the altcoins. If I just go, for example, onto AVAX as an example, there's been a real opportunity here where this has just been running up. It's just been, you can see we've broken structure, and I want to talk about structure in a second. But lower the time frame, the more obvious things are going to be. And this is why certain people will FOMO you in. And this is what we're going to talk about, FOMO. FOMO is hugely important. But the trend is your friend. If you go against it, it's going to hurt you. If you go with it, it's probably going to help you. You know, you've got to think of it that way. And to some people, that looks really bullish, and it's like, oh my God, look at that, I must buy it. Ew. But realistically, the trend is never on your side all the time. Now, why does this look so good? Because Avalanche has dropped so much, right? We are still in a downtrend. There's nothing, even on the daily time frame, other than the fact that we have broken structure here. Realistically, we've got a lot of these lows to kind of combat still. And we could go right up and relief rally into a level of resistance and then pull back, because that's usually how the charts work. So if we're going to simplify this and look at the overall bias here, and let's look at levels, key levels first. You know, if you're going to put any sort of fib on this and look at that level, you know, you may well be looking at a $22 level. But what is there? Level of resistance. Ooh. Why would you want to go long now for it to turn around there, for you to come back on yourself, and then you're in a loss? So, let's talk about trends, right? So the time frame will depend on you. As an individual, I cannot set that for you. Whether you want to swing trade between the 4 hour and the daily, give or take. If you want to be a day trader, basically, I don't know, 30 minutes, 45 minutes, 1 hour time frame sort of situation. Scalper, anything below 15 minutes. And obviously positional holders, much longer in terms of the daily, the 2 day, the 3 day, maybe even the weekly, right? But this is the thing, the trend is your friend. So there's a lot of indicators you can use, but what you need to see first is visual. I've already just shown you here that this is a downtrend. Why? Because we've formed a high, low, lower high, lower low, lower high, and kind of a low. You know, we're just continuously going up. What we're looking for here is actually this pattern now, which is starting to slowly form, that is. Basically, an impulse, a pullback into a higher low, and then a new high. Pull back into a higher low, then a new high. So essentially, it'll look a bit like this, where it'll just gradually just keep trickling up and up and up. And it gets very boring if you're watching this, but ultimately, we're looking for something like that, right? Relatively straightforward. Now, this is the thing that I'm not a fan of, right? Looking on YouTube, seeing the FOMO, oh my God, look at this, he's done this. No one cares. Well, I don't, but you might, because people need to push their backs, don't they? Yes. But yeah, you got to be careful, right? So to find the trend, you got to look at that. But there's other metrics to look at, other indicators that can help you. Moving averages, EMAs, you got Bollinger Bands, you got other momentum indicators, which are hugely important too, such as the RSI, if you're interested in that. There's a lot. I'm not going to cover them all in this video, but I want to give you a few examples of what you can utilize and use just to give you a very, very quick bias of the market. And for me, there's like 3 or 4 main things that I always look for, but 2 of them are dynamite, realistically, and you can combine them both, right? The biggest thing you got to worry about in cryptocurrency is The flow of where everything is going. Is the money going in the crypto market or is it going out of crypto market? If it's going in, most time, trendy uppies, right? Going out, trendy downies. Simple. Right, so let's look at BTC. Simple example. Let's just zoom out. Looks like a dog's dinner, right? I know. But as I've said before in previous videos, if you're looking at the dominance chart, whether you are looking at BTC dominance, whether you're looking at Ethereum dominance or the USD dominance, you can kind of get a picture of what you're trading in. So if you're in BTC dominance, trading Bitcoin pairs, Ethereum dominance, trading the Ethereum pairs, you get the picture, USD, whatever, right? Give you an example. So this is the dominance of USD, right? So this is basically, it doesn't matter if it's just tether.d. So if you go onto here, go into the indexes, USD.d. If you just want to use that one, or USDC.d. I've combined a few. But realistically, right, the metric is simple. Up is bad, down is good, right? So currently right now, what's happening? We're going up a little bit, right? Yeah, I know. Amazing. Why? Because this is coming down. We've already had a massive run. This is in a massive uptrend. This is an obvious uptrend. And this is the sort of thing you want to get involved in. What would I wait for? Well, see where this goes. If this goes down here and then starts to turn, because ultimately what's happened is altcoins have probably hit resistance or Bitcoin's hit resistance and it's starting to correct, that will then start going back up again. And then maybe actually it was resistance into another low. The bottom's not in yet, potentially. Those kind of factors could be hugely, hugely big bearing. So what else can we do? So that's a chart you should look at, realistically, right? So if you want to like combine that, if you want to do it on the screen side, if you want to, that's what I utilize quite a lot. It makes life a lot easier for you to understand. Now, this is what annoys me a little bit, is understanding that, yes, you can use this chart, great, happy days, but what other indicators? You've got EMAs, EMAs work well. So an EMA 21 works well in crypto. If you want to utilize this with a crossover strategy, put the smoothing average on there. If you want to use it as, I don't know, the EMA 8 is a one that I've used before and I often use. You can kind of think, well, when are we going to go net long? When are we going to go net short? Right? Cool. But if you then go into the higher time frames, go to like a three-day time frame maybe, you know, you can see here from literally November time when the market literally crippled, we were going up, and we continued just going up and up and up and up. Guess what? The time to be in the market was not that time. It's like, get out of the market, let's wait, see what happens. Right now, we are miles away from those moving averages. Same on the daily time frame. We're miles, well, not miles away, but we're catching up to them. So realistically, there may be an opportunity to jump out of the market very, very soon because we may well be hitting resistance if that starts to turn around. Following so far? Probably, hopefully, either way. But that's hugely important. So when we're looking at that, an EMA crossover is really, really useful, but you can obviously use these on any asset, anything. If you want to look at any asset, you can. So again, you can see here how, you know, how the dominance has changed, but realistically as a daily time frame, what is it to buy? Nothing, other than the only thing that you can buy, and I've said it before, is buy the level. If you are doing some simple TA, looking at support and resistance, and you've got it very, very clear, there's nothing wrong with buying those monthly levels or those weekly levels, right? There isn't. Nothing wrong with that at all. But always remember, where are everyone else going when it starts to rally? You know, you can see this from here. Is there anything for you to buy realistically on this bit here? No. When it starts going down like this level and seeing these regions here and seeing them holding, there's a level there. There's an obvious level here. But if you just zoom out, you can see where these levels are. Level here, level there, right? It's not rocket science. It really isn't. But the biggest problem is influencers do not tell you what is actually really happening. They don't just give you an overall bias. This is why I've been saying, I'm out the market, I'm not interested, like we're still downtrending. It looks horrible, because when you start looking at like the weekly or the 3-day time frame, like there's nothing to buy realistically other than those key levels. And even when those key levels do, you know, fill up your orders, you'll be selling them on the next relief bounce, because why wouldn't you not sell at levels of resistance when you've made a lot of money, which some of these bounces will make you a lot of money if you're buying them at the right time. I mean, it's just kind of obvious. It's just a bear market relief, as we say, right? So it's hugely important. So what to do is very simple. Follow the trend. What to do is to have a metric of money flow to understand where that dominance is going and why it's important. Another thing what to do is remember simple rules. a rule like that has no emotion. You do. You have lots of it. That doesn't. And that's just one indicator. There's other stuff out there as well. You can use the likes of Bollinger Bands, for example, right? If you understand how Bollinger Bands work, keep it super simple. Buy the low, sell the rips, basically. Buy low, sell high. And obviously, depending on your time frame, you can kind of see how it hits a level and you can ultimately take profit when it hits these little spiky toppy bits, right? Just keep it super simple. You don't have to overcomplicate it. And guess what? There's a moving average within that as well to help you. There's other stuff as well. As I've said before, you've got the RSI indicator. That's a momentum indicator. So when it gets to certain points, you can buy. When it gets to certain levels, or it's trending, essentially, you can jump out as well if you so wish to. A lot more information is required. I know that, but that's why I've got links below to courses if you are interested. But for me, it's all about what not to do. What to do is great, but what not to do is buy into a mega downtrend and hopefully it bounces and keep calling, oh, it's a bottom. This could be a temporary bottom. We could be looking at all kinds of different situations here. And BTC, look at the BTC. Nothing wrong with us going to 24, 26k, give or take, retesting those EMAs. If it doesn't get through it, because the downtrend will continue. Everything will then continue going down again because it's weak. The bulls are not getting that relief that they need, which is important. Anyways, hope you enjoy. Don't buy into a downtrend unless you're buying key levels with the absolute certainty that you are expecting it to go even lower, because downtrends flow. It's like current, not good. Watch this video as well if you're interested. Enjoy.